Joining us now to give his read on the market and all these kinds of things is Willie Walker, Chairman and CEO of Walker Dunlop. Also, by the way, a member of the Mortgage Bankers Association. Are you behind sort of the sentiments of that letter, Willie?
I am, David. Interest rate hikes have hit a small percentage of the economy. Things like government, that's 35%, didn't get impacted by rate hikes. Healthcare, people are still spending on healthcare, that's 18% of the economy. Banks and real estate are getting slammed by these rate hikes, and as a result, we did send that letter to Secretary Powell.
Yeah, commercial real estate, banks as well, of course, right in the crosshairs there. So we always like to get a quick read on the market from you, particularly with that recent move up at the longer end in terms of yields. It's come back a bit. What are we seeing there? What are the implications?
So as the yield curve has flattened, we have seen people who had a floating rate loan and try and move to a fixed rate loan have a harder and harder time doing that as the long rates have gone up. And so there was a moment there earlier in the year where somebody who decided to float years ago could sit there and say, I'm going to flip over to a fixed rate equivalent. Today, given where the 10-year has moved, it's a lot harder to do that, which is requiring a lot of real estate owners either to go back for capital calls to raise more equity capital or potentially add leverage to their fixed rate loans and use that extra proceeds to go and redo a floating rate loan.
And is that working? You know, what's that conversation
In some
like?
instances it works, in other instances it doesn't. I mean, you're seeing it across the board, not only in office, which is very clear to find financing on office is extremely difficult, but even in a very liquid market of multifamily.
But have we seen delinquency rates rise to a level we might have anticipated, given, again, what we've seen over the last couple of years?
Not at all.
Why?
So if you go back to the peak delinquencies in the Great Financial Crisis, Q1 of 2010, and it's important to remember timing here. Remember, GFC begins in 08, get into 10 when we hit peak delinquencies, but that was 8.9% of commercial real estate loans were delinquent Q1 of 2010. Today, it's 80 basis points. 80 basis points, less than 1% are delinquent. And the charge-off number is equally as low. It's 8 basis points of charge-offs in Q2 versus 2.9% during the GFC. So we're nowhere close to what we saw previously, and yet everyone continues to talk about what appears to be a building storm.
You said that it's wreaking havoc, though, in the real estate market, the Fed hikes. Is it doing enough, though, to lower prices? Because that's what they're trying to do, is fight inflation on the rents, on the sales sides, because you still got this tight jobs market, and you still have people that are locked into these low mortgage rates that are not trading. So I'm not sure we've seen the desired effect even. So maybe the Fed has to do more.
Yeah, Sarah, the desired effect as it relates to getting rent growth out of the market. That is really a supply and demand issue. A lot of multifamily was built. It's being delivered now, and as a result, rents are flat or going backwards. Okay, so that's the multifamily side. That inflationary pressure is gone today. On the single-family side, you all had someone on this morning who was sitting there talking about the fact that cost of housing has gone up. The cost of housing is not going up for American consumers. Cost of rental housing has been, but is not. But single-family mortgages, 80% of Americans have a mortgage that is a fixed-rate mortgage under 5% locked in for somewhere close to the next 30 years. That is a massive gift to the American consumer. And it's very interesting because unlike other Western developed economies like Japan, the UK, and Canada, where people borrow short-term and floating rate for their home mortgage, we have the great gift in the United States of Fannie Mae and Freddie Mac to buy all that paper from banks and allow people to have that added benefit of having a fixed interest rate on their mortgage.
Right, that's why nobody's going to sell their home. That's why there's no
one's going to sell their home. That's exactly right,
That's why the home builders are doing so well.
But that's why pricing is a problem, too.
Yeah, but the home builders doing well. I mean, careful on that for right now, because what they're doing is they're delivering inventory into the system that is highly unaffordable to the average consumer.
Meaning what? I'm sorry.
Meaning an average purchase price of $452,000 last quarter for Lennar. An average consumer can't buy a $452,000 home. They're obviously buying them today, but with where mortgage costs have gone, watch out. The home builders are buying down rates right now, which is allowing them to continue to move inventory. That's great. But at some point, that sort of game or financial manipulation ends.